Hey, it's Ed here. Today we're taking a look at technical analysis for SP500 with Elliott Wave Theory. So today we're going to be focusing on the more local structures, starting from the highs of $180 around the 13th of December. Since then, again, we've had a quite impulsive structure coming down, and the main idea has been that we've had this as a 1, 2, 3, 4, 5. We had a chance where this was the third, fourth and fifth as well, and at that point we would have had those divergences in play. At the moment, we don't have divergence into these current lows that we had, which generally means that this is either an extended fifth or the fifth has already happened in here. That is, again, most generally. If we don't sometimes have that divergence between the third and fifth, that is something that happens. But again, generally, we want to be seeing that divergence happening. But now, again, as we did take out these lows, it is more likely that this is indeed an extended fifth or something else. So if this is an extended fifth, we could be looking this as a 1, 2 here. And as we have already getting some kind of overlap here, this is the only thing that I see here more impulsive to the downside is that this would be another 1, 2 structure where this would be some kind of diagonal into these lows, or possibly even made already a diagonal where this would be the structure we would have created. So 1, 2, 3, 4 and 5. Like so. So that is definitely a possibility. Again, at that point, we would not be expecting it to take out these highs of $38.95 or $90 or $3,900, give or take a few cents there. But yeah, at that point, again, we would be breaking these structures upwards, most likely. The other scenario is that, again, we would have that third up in here, like we had originally, and this would be something of a start of something new. At that point, we would have to basically say that this is not an impulsive wave structure, or if it is, then we would have to say that we have this as an ABC structure coming down. And this structure here would be the B wave of the structure that we started from here. So this would be an A wave, B wave, and then C wave, creating something larger. Let's see if I had that actually down here. Yep, I did. So this would be here. And overall, let's get rid of some of these unnecessary things so we can clear up the chart a bit. Something like that. So we would have this as A, B, and C. So in here, we would be looking for a partner leg in here. Whether this wave C is done or not quite sure as of yet. We'll see if that happens or not. Not the best looking chart if we want to be labeling it like this, but again, this is the only scenario where we have this divergence and can place the fifth here. I would like to see, or if we basically take out these highs, then we can pretty much be safe to say that, okay, we have this as more likely scenario. If we continue to the downside, however, I would be looking for this. I'm still on the short side on S&P 500. I had another short setup on Nasdaq around these highs here, and we'll see if that is going to hold. Definitely going to have stop losses above these highs on Nasdaq as well. They are very similar at this very moment, so definitely can be playing out either of these. There's not really many news events coming up this week, I don't think. Even if it is this shortened week, probably early next year is the ones that we are going to be very much more interested in. So I wouldn't be expecting too much of a dump here. Although again, if we are indeed in an extended fifth, this would be the 1, 2, 1, 2 scenario. And if this indeed is a diagonal in here, we wouldn't be expecting too large of a pullback before a continuation of the trend downwards. Because again, on diagonals, it is very common to see that they have very short retracements, and the third waves would be very aggressive. So this would be just a 1, 2, 1, 2. So this would be most likely a third, fourth, and fifth, and this would be 1, 2, 3, 4, 5. So it would be quite a big structure coming down, and that would be the fifth wave. At this point, we could be confirming that this fifth wave or 5-wave structure is no longer part of this. So at least that would be giving us some higher time frame clarification, which would definitely be in need at the moment. Because again, at the moment we still have a couple of the ideas here on higher time frame where where we could have this as an ABC instead here, and still could have the continuation upwards. Again, 2.618 extension would be the max we would be expecting. This don't seem to be lining up too well. Let's see, let's get that 2.618 on the chart here as well. So 36.61, we should get beyond that to nullify this option as an A, B, and C. Until that happens, we can still keep on looking at all the options as possibilities. But yeah, I think those are the structures that I'm currently looking at, staying on the short side until some of these highs are taken out and the market structures change to a bit more bullish. However, as we've seen, these are the lows. These don't seem like an impulsive structure to the downside, to the upside. So overall, I'm still leaning more bearish, even if we would take out these structures here as highs, because again, this would more likely be a three-way structure, or we would be getting some kind of pattern leg here and then getting a pattern leg for this structure up in here, potentially taking out these highs. And again, that is something that is definitely on the table. So I wouldn't be too surprised on this, but I wouldn't be expecting a structure that would be basically taking out this whole structure at this very moment, at least. But we can talk about the other options later on, if those or if these highs are to be taken first, and then we can take another look at the charts. But that is going to be bringing us to the end of this video. If you want to be learning more about Elliott Wave, there is a basic course on the Patreon available, if that is something you would be looking for. And yeah, that is basically it. Join the free Discord if you want to be sharing counts or discussing about something else there. That is completely free. But thanks for watching and see you on the next video. Bye bye.